forward. Now we have Bhavin Shah, founder, CIO and CEO at Sameeksha Capital to discuss all of this. Bhavin, good afternoon. Thank you so much for joining us on the show. Let's start by talking about some of the valuations that Rima just highlighted as well, right? Do you think after that 23% fall that we've seen in the index, 8% rise in April so far, are we at a phase where we could see an up move? Valuations had become cheaper, but is this the time on the fundamental front maybe to watch out for these big names?
We have been looking at them and, clearly valuations by historical standards had become very attractive. They could still be considered reasonably okay. But I think the confidence that one has to develop or conviction one has to develop is in what kind of growth and how much, and that is where I think the concerns continue to be there.
Okay, all right. Bhavin, hi. Thank you very much for joining in. Just wanted to narrow down a little bit on Wipro. It comes out with its earnings tomorrow. The street is hoping for maybe more of an announcement with regards to maybe a buyback. What is your sense in terms of all of the announcements that they've made, the latest acquisition that they've announced, as well as the deal with Olam? And what are you expecting tomorrow?
I don't have any specific expectations per se, but yeah, buyback, would be good, because I think it's a slightly better way to distribute. I've stated before that Indian government has made it very difficult for companies to return cash and create a sort of opposite of incentive for returning cash. And that's why we are seeing, companies making large deals, and doing acquisitions. Now, as far as acquisition by Wipro, I think the history of those acquisitions that Wipro has done hasn't been as rewarding as one would have liked to see. So I think we'll have to see how this one plays out as well, and whether it kind of changes the course for the company, which has been a struggle for a long time.
So, Bhavin, coming back to the valuation point again across the space, because you said, yes, valuations are attractive, but there's still some fundamental issues that you are seeing. So it is still not a fundamental buy, but a valuation buy, according to you. What are some of the risks that you are still seeing in the sector? Is it still the AI story? Is it still the growth concern? What makes you still a little wary of buying into it for fundamental purposes?
I think there are multiple issues. First, there is, with all that has been happening in the global scene, the US economic growth story probably is a little punctured as well for the time being. We have to see how, the ability to lower interest rates, and I think, broadly that all the factors that US has been dealing with, tariffs, not tariffs, this Iran war, crude oil, price increases, its impact on the consumer demand, all that. Perhaps there is a little bit more uncertainty with respect to the US economy than one would have liked to see. So that's a starting point. Then we were already in a post-COVID era of lower growth for IT services. IT services trend growth has been declining, for last, let's call it, maybe almost 2 decades. COVID gave a bump, and that bump is over, and now we go back to that, slowing growth period coming forward. And then you bring in the whole issue of productivity boost led by the latest developments in AI. I think so, there is, all this is not fully understood, perhaps, by most of us, and so it becomes difficult to quantify and have a very strong confidence on forward growth for these companies, what sort of growth. And so I think, we will keep listening to companies, what they have to say. Accenture already reported, and I think market didn't like what they had to say about growth. So I think that's one of the important early indications we already had on the sector. So I think let's see what comes out in terms of the growth outlook. Obviously, the Indian IT companies benefit tremendously with such a sharp depreciation of Rupee. And so that factor might have played also some role in recent uptick. But overall, it's a very mixed bag, I would say.
Okay, it's a bit of a mixed bag. So, like you pointed out, right, Accenture, what they said in terms of guidance, the street didn't like it. will that be the case also? If there is a miss that comes in terms of maybe the guidance or the commentary that they've given, then maybe again we could see a bit of a derating coming in for IT in Q4 specifically.
The risk is definitely there. The risk is definitely there.
Okay.
All right. Bhavin, from a longer standpoint, we've reached this trough where the institutional holding in IT is the lowest that we've seen. We're seeing this entire valuation gap also which has taken place. But do you think that after the dust settles with, say, the geopolitical uncertainty and the markets start sort of, consolidating or maybe moving without the geopolitical risk, do you think that AI risk will probably come back and get factored in? Or do you think that there could be some amount of resilience in the IT space and maybe this is a good time to sort of accumulate?
I think AI is an ongoing, ongoing risk. I don't know whether, from the levels of improvement we've already seen, will there be more? There is definitely that potential. And, clearly the improvement or the upgrades that came in the AI tools in the month of November, December were, surprised most people. Can there be more surprises in future? I don't know. I think that's definitely, looming large, so to speak. And I think that also will keep a bit of a upper lid on the valuations. And most importantly, when you put it all together, what's the growth outlook? As I said, trend growth was already going down even without AI. So it is going to be difficult to construct a very very bullish case for IT, especially large cap IT. You could have some mid-sized companies enjoying the advantage of their size and maybe grabbing some business from larger companies, and as a result being able to deliver healthy growth rates. That is still possible.
Okay, so you're still comparatively positive on mid-caps versus large-cap IT. You indicated at the start that government has made it more difficult to return cash back to shareholders or reward them in any way. That has been one of the factors why investors have liked IT companies before. Do you think for growth now, acquisitions the way Wipro has made it or other companies have made it could be the next growth lever for these companies, considering that it is not coming organically?
Companies will be definitely tempted to do that. Whether or not they can generate value from acquisition will always, the history of acquisitions is broadly, a lot of academics have done, academicians have done research on acquisitions, and generally very few acquisitions actually end up delivering value. So, that is the chances are, as you say, that more money will be spent on acquisitions rather than distributing cash, because it's if ultimately the tax rates on dividends and buybacks is just too high.
Okay, all right, Bhavin. We're going to leave it on that note. It's always a pleasure listening into your views. Thanks very much for joining in.